Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into the action today on this Thursday, June 27th, 2013. Markets are up on the day. You can see it's just been choppy action throughout the morning session. Initially, we opened with a gap up. We floated up a little bit, then came back in, floated up, and are now coming back in. Small bearish pattern of consolidation is beginning here, which tells us there's a small chance we could head down to the 50 MA. Overall, unless we see something major happen this afternoon, markets will most likely end higher for the third consecutive day. And again, a 3-bar surge back up off of those panic days just late last week can again tell us that the market is factoring in going into this holiday now next week, and a couple other factors that will ultimately lead to a neutral positive market until after the holiday. Now again, there could be some gyrations before the holiday, I do think, but for the most part, as any holiday will be, the volume will get very light, and therefore the markets generally tend to float neutral to higher. All right, I think a majority of the gains are already in. My upside target on the SPY can be seen on the daily very easily. You have the dual moving averages, which we kissed today. That's target number 1 right around 162. And then this gap fill right above would be your target 2. I don't really think, even with the holidays, I don't necessarily know if we'll get above that going into next week and the following week, all right? And I do expect further selling. There's little doubt in my mind that we will see further selling in this market. You just have to expect bounces along the way. Just to give you guys a sense about it, I went long the SPY with my members here at InTheMoneyStocks.com late last week, right here at 157.50. All right, we sold today for a $4 gain at 161.50. All right, so again, it's just simple, smart trading. Don't let emotion get you out of control. Just because the markets are falling doesn't mean you can't buy it. You shouldn't be scared. That's emotion. What you want to do is just step up at the right technical level, which I explained in my nightly videos to our members was at that 157.50 level. The reason why that was an important level, because if you go back to 2007, that was the pivot high, which was the all-time high prior to us taking it out recently. Okay, so really obvious level there for the bounce. We got the bounce. We came up to first target. I decided to be safe, take all of the money off the table, a $4 gain on the SPY. Yesterday, we made a nice score on RSOL. We bought in at 215, out at 275 first half. Beautiful 28% gain on that one, which was another swing trade for our members here. So, again, listen, just like I've said always, doesn't matter if the market goes up or down, as long as we're able to look at the charts, find the PPT, which is price pattern and time in the charts, it will tell us which direction to go. Okay? All right, guys, a couple other things to go over today. Gold. Gold was floating higher slightly today and then reversed here. It was going sideways and then some selling came in. It's getting a little bit of a bounce. You can see there was a little small bottoming tail intraday here, right around the 115.65 level. And so far, we floated up just a little bit off of this. But again, gold continues to go down. There's a lot of people out there that are thinking this is the area for gold. It is not. All right, I even wrote an article when we were trading here at neutral to positive on gold. I said earlier today in an article, I said it's going lower, and no sooner did I publish that article, gold just dumped out beautifully. The key here is to look at the daily chart, folks, and you have to recognize this. This is your next level right here. All right, see this little pivot low around the 113 area? To me, that's where we're headed. Then we will get a sizable bounce. You'll get a pretty solid bounce off the 113 level. However, it will not be the end of the road. All right, you will ultimately go down to your final target, which is just below 100 here. And again, you could draw a trend line right here. This is your ultimate resting place for gold before it has a long-term sustained move higher. All right, and again, just to give you a sense of this, when the GLD in 2011 and 2012 were trading at their highs here and their highs here, I've been a staunch advocate of saying gold was going to come down drastically here. One of the things that led me to understand that was that on the radio, if you're just driving in your car, you were hearing gold commercials nonstop. Oh, buy gold here, do this, do that. It was just constant. So as long as you're hearing that, that's telling the average person to buy gold. You know the top is at hand, and sure enough, it was exactly that. And look at the fall on this now. It's been an amazing fall. We're at multi-year lows on the GLD, which is the gold ETF. And in all fairness, guys, it probably has a little more to go and then a good solid bounce. But again, there'll be a great buying opportunity in gold in the not-too-distant future. And again, 1200 was my long-term price target I gave literally a year ago or more, and we are now hitting that 12. I think the low today was like 1206 or something like that. All right, crazy stuff. Absolutely great call there to be able to see literally, $600 above this current level that's exactly where it was going. All right. A couple other stocks in motion today. Apple. Apple continues to be weak. I day traded this once earlier today. And again, we can erase that line for now. We don't need that on the chart. Short term, your next support on Apple is going to be your double bottom here. Now, there's a lot of speculation. The reason why Apple's been so weak lately is because end of quarter selling. So, no hedge fund person or fund manager wants to have Apple in their portfolio at the end of the quarter because it has to go out to clients, so they don't want to see that, oh, we owned Apple throughout the quarter. So I think that is probably some of it, which means you might get a little bit of a reprieve into the new quarter. But I still think Apple's going lower, guys. I mean, I think bottom line is those fund managers aren't going to buy back into Apple unless we see a sustained bounce or a move back up. So it's not like you're going to get forced buying or buying back in on Apple starting at the new quarter. So just be aware of that. The 385 level is major support. If it breaks that, you're talking 350 to 360. That will be a major level on the stock. All right. Couple other things to look at here, guys. Amazon's down a $1.41 is a week on the day. However, financials are doing very, very well. Look at JPM today, guys. And again, JPM was a beautiful one because all the amateurs got fooled that this was a breakdown, but there's no confirmation here. And look at the move back up on this to the 20 MA. What a bounce. Now, again, it is at resistance, which is another reason why I want to take some profits on that SPY trade on the long side, because you have to look at JPM as a leading indicator, and sure enough, it was into resistance. Now, yeah, it could go a little bit higher, but you got the 20 MA, and look at the gap fill. I mean, you basically filled the gap as well right there. This is a huge area on JPM, and it could tell us that the market could be getting into a little area now over the next few days, going into early next week, where it's a little more choppy. It's not such an easy move up. Now, again, around the July 4th holiday, assuming everything's quiet, yeah, you're going to float up a little bit, but remember, you still have Friday, Monday, Tuesday, and then Wednesday you probably get really light. Thursday, market's closed. Friday's going to be dead, too. So it's more around on either side by a day or two that I'm thinking the markets are more in float mode as opposed to, tomorrow and Monday. So just be aware of it. It could be a little rocky. Nothing's just written in stone, especially when you see JPM filling a gap like this. JPM could easily pull back, which implies the markets could pull back as well. All right, what else do we want to talk about here today? Let's take a look at silver. Silver is down. Actually, silver's up now. It was just down a little while ago. It's floated back up. It did pull back off of early morning moves, but silver's actually holding up much better than gold. And it's an industrial metal, so I think that makes sense. The economy's not horrible, even though it's not great. Gold is something that's just getting dumped out left and right. Okay, and I think actually percentage-wise, silver may even have been down more than gold. I'd have to calculate that out, but it is a huge percentage for both of those metals, guys. Absolutely huge percentage. All right, let me just see if there's anything else here on the charts. A couple day trades today, but it's overall been a little bit on the slower side. One of the nice pattern plays that we did earlier today was LVS. LVS had a beautiful bullish pattern right here. As the 20 comes into it, there's your hop up. And it's just as a day trade, that's perfect. I mean, really all you're looking for is a pierce of this double top line, and it pierced it by a beautiful amount before coming back in. But that's just a nice consolidation bull flag with the 20 sloping up. Jump on board. You even got two of them, right? You got this one right here, where it goes up here to here, okay? And then you got this green candle, and then this was another flag pattern with a time count right there, which took off there. So it was really a flag within a flag. Beautiful setup right there for a nice quick pop. Been a couple other trades I've done today, but overall not too busy. I think things are starting to slow down just a little bit. Small caps have been moving pretty well over the last few days as well. But yeah, I think that's about it. Let me just jump back to the SPY and take a quick peek. We are seeing the markets trying to get back above this 20 MA. If they can successfully get back above, you got to respect that in the light volume. Today only 95, 96 million traded, which is not horrible volume, but by no means is it heavy volume. All right, again, guys, remember the levels on gold I mentioned and on the S&P 500. These are the key levels you're watching. Apple, watch that in 390, 385 level as well. Very important level right there. All right, guys, have a great afternoon, great evening. I will talk to you all. Come take the 7-day free trial here at InTheMoneyStocks.com.